She knows.
Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. And Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Yeah, thank you, Jeremy. And thanks to all of our Irish listeners. It's St. Patrick's Day, so happy St. Patrick's Day. Well, it's about the Middle East, the conflict, the escalation of that conflict, really raising fears of some larger potential oil shock with supply. So we saw oil prices extremely volatile, surged to about 119.5, plunging to about 77, and then rebounded to about 99, ending the week up about 8%. So we saw the International Energy Agency announce its largest ever release of 400 million barrels. So how did that affect the market? Well, with the S&P, that was off about 1.5. The Nasdaq was down about the same. The Russell 2000, that small cap area, off about 2. Volatility, that spiked. We saw the VIX up about 35, ended nearly about 27, implying about 1.7% daily volatility with the S&P 500 in terms of movement. So we saw 9 of the 11 sectors in decline, led by financials. They were the worst performer, down about 3% due to continued concerns about private credit. JPMorgan came out marking down some collateral loan values, reducing some borrowing capacity for that private credit area. So if we look at some other assets, we saw gold down about 3%, silver down about 5%. Bitcoin was actually positive, and U.S. Treasury yields went up on fears of inflation, higher energy prices, and then we saw the 3- and 10-year auction for Treasuries come out, and we had a record 66 billion corporate debt issuance, and that was weighing on bonds. So we're having bond prices come down and those yields moving higher. So we saw U.S. economic data come out. So we had the CPI February numbers. That increased 0.3% month over month. That was higher than previous announcement. We saw the core PCE in January up about 0.4 months over month. That was at 3.1% year over year. Both showed some rising inflation pressures before the war. Now, we saw Q4 2025 GDP that was revised down 0.7% to 1.4%. And we saw the final sales to private domestic purchases lowered to about 1.9 from 2.4. Consumer sentiment, that came in at about 55.5. That was down from 56.6. And we saw the one-year inflation expectation pretty steady, about 3.4. Housing starts and existing home sales, that rose as affordability improved and multifamily building surged a good bit. Now, on the international front, we saw the major global indices falling about 2%, pressured by the U.S. dollar strength and higher energy prices. Over in China, we had the consumer inflation rise to the fastest pace in 3 years, and producer price deflation eased. New GDP growth target was set to about 4.5 to 5. That was the lowest since early 1990s. And we had some trade surplus hit with some record highs, with exports up about 21.8% year over year between January and February. Now, the week ahead, geopolitics, energy, that's going to dominate the headlines right now. We'll get to some central bank talk internationally as well as domestic, probably playing a lot of role. But basically, we had with Iran, their new supreme leader vowed to keep the Straits of Hormuz closed, threatening major global trade and energy checkpoints and affecting those prices. So still under a lot of stress, still putting a lot of stress upwardly on energy prices with oil. We did see a small number of ships, including an Indian oil tanker, move through on Friday, but flows were still severely constrained. We did see some efforts unfolding with the IEA. They had a major energy release. We had the U.S. allowing some countries to buy some stranded Russian oil for 30 days. But overall, we're just looking at if we get into a prolonged disruption that may require some additional inventory releases just to kind of stabilize oil prices. Central banks and monetary policy, we're going to see 6 of the major central bank decisions will be on deck this week. We'll see our central bank expected to hold rates steady. We'll look at the summary of economic projections. And then there's about a 50% chance of a rate cut before October. A lot of what's going on with the energy markets and the inflation because of the restraint, the geopolitical events, that could play a big role here on what the Fed will do or not do with interest rates, especially since we have potentially a new chairman coming in here shortly. Other central banks, let's look at Australia, Canada, and Japan. The UK and the Euro central banks will be on Thursday. The other ones, I think, earlier in the week. All are expected to maintain current rates, but they might have some hawkish tone shifts here in their rhetoric. We're looking at U.S. economic kind of corporate data. We'll be looking at some housing market data coming out, some producer price, the PPI numbers coming out, some regional manufacturing survey. And then we'll start to kick off some earnings here with Micron Technologies reporting on Wednesday after the close. And then we'll kind of look internationally to some economic data with China. Their monthly economic data dump will be rolling out, and Germany's economic sentiment. Canadian CPI will be coming out, and then the UK employment figures kind of wrapping up the week. Jeremy?
Graham, we always appreciate the information and expertise, and thank you to our listeners checking in with us every single week. And we do have some classes coming up here soon, so just check our website out, and we'd love for y'all to attend, or anybody, friends or family that would like to join those classes, the retirement classes coming up, and we look forward to seeing you next time.
Take care.